Ladies and gentlemen, good day and welcome to the Q4 FY23 earnings conference call of Century Plyboards India Limited, hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Deepak Agarwal from PhillipCapital India Private Limited. Thank you, and over to you, Mr. Agarwal.
Good afternoon, everyone. On behalf of PhillipCapital India Private Limited, I welcome you all to Century Plyboards India Limited, a Q4 FY23 earnings conference call. Today we have with us senior management represented by Mr. Sajan Bhajanka, Chairman, Mr. Sanjay Agarwal, MD and CEO, Mr. Keshav Bhajanka, Executive Director, Ms. Nikita Bansal, Executive Director, Mr. Arun Jalasiya, Chief Financial Officer, and Mr. Nehal Shah, CSO and Head Investor Relations. I'll hand over the floor to the management for their opening remarks, post which we will open the floor for Q&A. Thanks, and over to you, sir.
Thank you, Deepak ji. Thank you. And thank you for hosting this call also. Gentlemen, thank you everyone for taking your valuable time out for attending the Q4 FY23 Century Plyboards Investor Conference Call. I am Sanjay Agarwal, MD of Century Plyboards India Limited. I have alongside me Sri Sajan Bhajanka, Chairman, Mr. Keshav Bhajanka and Ms. Nikita Bansal, Executive Director, Mr. Arun Jalasiya, CFO, and Mr. Nehal Shah, CSO and Head of Investor Relations. I presume that every one of you would have gone through our numbers in detail. Let me still brief you on the key highlights of Q4. Despite the challenging demand scenario and sustained inflationary environment, CPIL managed to achieve the highest ever quarterly revenue of 962 crores. EBITDA of rupees 176 crore, PAT of rupees 113 crores for Q4 FY23. Despite the sustained input cost pressure in timber prices in particular, CPIL's overall gross margin were higher by 220 bps on quarter-on-quarter basis to 34.2%. The company's EBITDA margin too were higher by 340 bps quarter-on-quarter to 18.3%. The strong operational performance in Q4 was largely driven by plywood division, which registered strong volume of take in premium segment, along with the scenic segment, of course, thereby driving superior product mix realization quarter-on-quarter. Our plywood and laminate segment revenue recorded 17.5% and 1.6% quarter-on-quarter growth, while MDF and particle board segment revenue degrew 3.5% and 3.3% quarter-on-quarter for the quarter. Despite the surging timber prices, plywood EBITDA margin improved 42 bps quarter-on-quarter, largely driven by superior product mix quarter-on-quarter and operating leverage. Laminate margins, excluding BCG costs, remained steady at 15.7% in Q4. While MDF margins gained 460 bps in Q4, driven by softening of chemical prices and forex gains. Particle board margins were down 230 bps Q-on-Q, driven by higher timber prices and lower realizations. Timber prices continue to remain at elevated levels, while chemical prices, particularly phenol, melamine, US resin, have softened a bit in last 3-4 months and are likely to further soften in near term. price increase taken in Q3 FY23, Q3 and Q4 FY23. Plywood 2% price increase across all products except Scenic in January 23, laminate nil, MDF particle board nil. Our MDF brownfield expansion at Hoshiarpur commenced operation in March 23, and we expect the plant to see substantial ramp up in production over the next 2 quarters. Our South MDF capex is running as per schedule and is expected to come on stream in second half of FY24. While our first phase of greenfield laminate manufacturing unit in AP is expected to become operational in November 23, the greenfield plywood project is likely to come on stream by Q4 FY24. The upcoming greenfield particle board project in Chennai with a revised capacity of 800 CBM per annum with an investment outlay of 500 crore is expected to come on stream by Q4 FY25. Our working capital stands reduced by 2 more days to 50 days in Q4 FY23 on a sequential basis. FY23 working capital days down to 53 days from 63 days in FY22. We remain a net cash positive company with net cash position of rupees 145 crore as on 31st March 23. Our Q4 ROC stood firm at 30.33%. Despite the challenging business environment, the segment-wise growth guidance is as follows. Plywood, 13% volume and 15% value growth. Laminate, 25% volume and value growth. MDF, 30% volume and value growth. Particle board, flat volume or maybe some degrowth in revenue. We maintain our near-term margin guidance for our business segment as under plywood 12 to 14%, laminate 12 to 14%, MDF 20 to 25%, particle board 20%. Thank you, ladies and gentlemen. I now open the floor for question and answer.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pranav from Equirus Securities. Please go ahead.
Yeah, thank you, sir, for taking the question and congratulations on very good set of numbers. Sir, I just wanted to understand on the plywood side. So, what drove the growth in plywood, and are we actually seeing market share gain coming in plywood, let's say from the unorganized side? And even on the realization front, you have performed well in the segment. So, if you can throw some light on how the premium plywood had performed. That was my first question.
Yeah, thank you. And I'll answer this question. So, see, plywood, the growth that has come because of the growth that we've been driving in Scenic as well as in Century. We said it in the past as well that both products will continue to grow, and Scenic, the growth will be faster because it's playing in a larger market because it's the belly is about 40 to 45% where Scenic plays, which is between 80 to 100 rupees ply, whereas Century plays in a smaller market. So, but both will continue to grow. We have been doing various strategies over the past few years, and in Q4 definitely we saw all these strategies finally coming to fruition, and we saw good performance, and we hope to continue with this performance even in this year, but definitely not the type of growth that we saw between Q3 to Q4. That was a very big jump, because overall Q3 is a lower quarter for us because of festivities, etc., everything. So, I hope I have answered your question. And in terms of EBITDA, because you have to realize that our fixed costs remain the same, and because we did exponential sale, we were able to give a very good EBITDA for just this quarter, but it is not a sustainable EBITDA because seasonality comes into play, and we continue to maintain that we are going to try and deliver 12 to 14% EBITDA. So as you know, the product mix of premium has improved in Q4. We hope that this continues even this year.
Okay. And my second question was related to laminates. So what kind of strategic level changes you are making in laminates, let's say in order to grab incremental market share, and are you also looking at now going after export opportunity as well?
Definitely. In laminates, we had a very tough year, and this has enabled us to introspect and look at what are the growth levers that we should be activating. So we have already, as you correctly mentioned out, looked at a huge export market, which we are not catering to due to a lack of sizes. And we have taken the decision to go for 2 new sizes, 14x6 and 10x4. These larger size presses will be commissioned along with our Andhra unit, which is going to add to our overall turnover and export substantially. Alongside that, in the domestic market, we have seen the strength that our Scenic brand has brought to plywood and the fact that it has catered to the belly of the market. Similarly, in laminates, we are now launching, or we have earlier launched in this month, launched Scenic laminates, and we are sure this will be a growth lever for us going forward. Alongside the same, we are also launching our new catalog next month, which is going to be industry first and has a number of innovations. So all of these put together, we are confident of robust growth for the current year.
Sure, sir. And sir, my last question was related to MDF. So what gives you the confidence that you'll be able to grow at 30% on volume and value in FY24? So basically, some import challenges are impacting the industry, though the overall consumption continues to remain good. But this 30% kind of volume growth implies that you are expecting some market share gain. So if you can throw some light on how this volume growth.
So you have seen that in last 6 months, the international prices have come down, and the particle board industry has been badly affected. The particle board prices have gone down, so you have seen the impact in the results also. But there has not been any change as far as MDF industry is concerned. The prices have gone down, but the MDF industry in India has not budged even 1%. The only change, I believe, is actually in times to come. Our product has already come into the market, our expanded capacity. Green plywoods, new capacity has come into production. I think by July or by August, I think Exxon's plant will come into production, and there may be one or so, I think some small plant also will come into production. So all these are going to throw a challenge. But because we have the capacity and the market is growing by 25% per annum, so that is where actually, because we have the capacity, everybody else does not have the capacity, available to them. So that is why I believe that we will be able to grow by 30%. And, I expect that by the end of this year, financial year, we will be able to utilize the full expanded capacity. But the average capacity utilization, I think, will be giving us this growth of around 30%. We are quite confident. Otherwise, we are a person, you have seen that we are really not very too bullish a person. We are quite conservative in our approach usually. About this, I believe that yes, we will be able to, maybe in some quarter here or there, that might happen. But yes, we will.
Sure, sir. Yeah, that's it from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Rahul Agarwal from InCred Capital. Please go ahead.
Hi, good evening. Thank you so much for the opportunity and congratulations for a good set. I think wood panels was going through a bad phase. Plywood performance actually gives a lot of motivation.
Thank you.
Firstly, one clarification on plywood. So there is no capacity increase done in fourth quarter, right?
You see, we have been continuously improving our processes and few, gap machines in our existing plants, and that's how we still have capacities available in our existing plants. But yes, now a big expansion in Hoshiarpur has been taken, and presently also we have full capacity. Even for this year, we are absolutely ready. Whatever growth is coming, we are ready with that capacity within our existing plants. This is a continuous. Plywood is not a very capital intensive project, so this is a continuously going on project in our company. This investments probably we at times we do not even plan in a big way, and some small machine or some compensating machine is installed in plants, and we get that benefit.
So what I wanted to understand is the explanation given for plywood performance was more because of the sales mix, was more from a demand perspective, was more because you were pretty strategic in terms of balancing out Century and Scenic both put together. So I'm assuming that the capacity what you had at start of January was not higher than what you had in 3Q, right? And so the entire volume growth, whatever we have seen, is come from organic, and there is no debottlenecking capacity addition is happening in plywood. Is that correct?
Yeah. So even if you see in Q3, we were not at 100% capacity utilization. So we have capacity that is already installed, which we're utilizing. We also have a very strong SCM, which enables us to be able to cater to such spikes in demand. So because of that, we did not have an issue with respect to capacity. We are definitely taking expansion within our existing plants right now. We are taking expansion. For example, our Chennai plant is going through a massive expansion, which will be probably ready by the end of this year. So Hoshiarpur is a complete new setup having. So yeah, I don't think you can say capacity remains the same. Utilization has improved.
Got it. And on the price hike, you mentioned 2% from January except Scenic, and I think...
No, actually that was a mistake. Scenic also went through a price increase. Scenic went through equal price increase as Century.
I thought last quarter you guys mentioned 4% in January for Scenic MR. That was only in South India. Isn't that correct?
So South India, there's an echo. Yeah, sorry. South India, there are two products in Scenic. One is Scenic 710, which is the water product, and then there is Scenic MR, which we outsource. So Scenic waterproof is in-house. So in January, we took a price increase in all our product range. In South, especially in the Q3, we had to take one because of raw material pressure that we faced, particularly in South. And in South, we had not taken a price increase since a very long time because South never came under a price pressure. North had come in a price pressure last year massively. So we were able to balance out the pricing there.
It was my mistake actually. What written here is very clear. Plywood 2% price increase across all products except Scenic MR. That was my mistake that I did not read out the word MR. So that is how it got you confused.
No problem, sir. Thank you for that. And lastly, on laminates, again a clarification. So the Andhra first phase is going to be larger sizes, more for exports. You mentioned about how you want to grow the volumes for next year. But just a clarification on the margins, sir, you mentioned 12 to 14% is the band you look for fiscal 24. Is that correct?
Yes, that is correct. You see, we are launching a second brand, and initially, till we ramp up to say 1 lakh sheet plus per month, there will be a lower margin in the Scenic brand. So for this year, our guidance is slightly lower. But this is short term. I think for next year onwards, we'll again be back to the same 14 to 16% trajectory.
Perfect. Got it. And lastly, on the CapEx, there is some revision. So just to get this right, particle board was earlier 1200 CBM. Now it is 800, but pretty much the CapEx remains the same at 500 crores. Is that correct?
Yes. The capex was 550. You see, in these plants, just by reducing the size slightly or increasing the size slightly, you will not get too much of a saving in capex. But after a lot of discussion, after the current inflationary environment, after studying what the market requires, we have fixed the size of 800 cubic meters. We feel that this is going to be the best for us in the long term.
Thank you, Keshav, and thank you, everybody. All the best for fiscal 24. I'll come back in the
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Venkatesh Balasubramaniam from Axis Capital. Please go ahead.
Yeah, thank you for the opportunity. Can I request you to repeat your guidance once again? I seem to have missed a few numbers. That is the first question. The second question is, can you give, segment-wise, what was your capacity at the end of FY23?
Yeah. So, for the guidance, plywood, we are saying 13% volume growth and 15% value growth for the year. Laminate, 25% volume as well as value growth. MDF, 30% volume and value growth. Particle board, flat volumes and a little bit of decline in revenue. And in terms of margins, we are guiding for 12 to 14% in plywood and laminate division. MDF, 20 to 25% and particle board, 20%.
Okay, thanks. The second thing was on the capacity which you have. If you could just say what is the capacity at the end of FY23 and what is the capacity increase you are expecting in FY24 and 25 in each of the segments?
So FY23 plywood capacity would be close to around 3 lakh in CBM.
Yeah.
Laminate is 8.8 million sheets. MDF is 3,13,500 CBM and particle board is 72,000 CBM.
MDF, can you repeat, please?
MDF is 313,500 CBM. 3,13,500 CBM.
Okay, and particle board you mentioned?
72,000 CBM.
What is the increase which is happening in each of these segments over 24 and 25? That is the last question.
Yeah, so 24 we'll have, as Nikita also said, we are having capacity enhancements in a few of our existing factories. So that will add up another close to 15,000-20,000 CBM for the year. Then apart from that, we'll have the Hoshiarpur capacity which will come in, which will throw up 60,000 CBM for the year, which will come in by the end of this year. Laminate, the new press, the new export presses which will come in, which will add another close to 855,000 sheets per annum. And MDF, as you know, the greenfield capacity will add another, in South will add another 313,500 CBM in South of India.
Okay, thanks a lot.
Yeah.
Thank you. The next question is from the line of Girish Chaudhary from Avendus Spark. Please go ahead.
Yeah, hi. Thanks for taking my question. Firstly, on the MDF, you can, if you can give some color on the imports currently and in terms of price, discount versus imports, if one compares with organized players, where are we? That is the first part of the question. Second part of the question is again on MDF. If I look at your guidance, the pricing assumption is essentially flattish for FY24, but in light of the capacities which we have been talking of and imports, how confident are you of maintaining a flat pricing?
Yeah, so MDF, as far as the import is concerned, yes, about 20,000 cubic meter of MDF is getting imported. 20 to 30,000 cubic meter is getting imported in India right now. But you will see, and whether we are also watching, that there has not been any impact as far as the prices are concerned in the country, and there is not much of a pressure. So that's why we maintain that there will not be a price decline or price cut as far as immediate market is concerned. But as and when, the new plant will be coming up, our plant will come up, which may be the end of this year. Action's plant will come up, Green's plant has already come in. So all these will create some challenges. So we will have to see how it goes. But I really don't see, because this market is growing by 25% annum. I really don't see big challenges. But yes, you are right in a way that yes, there might be some challenges and we will decide as and when things come. So this is as far as the MDF pricing is concerned. And I understand very recently the international prices have gone up by 7% again in last about a month's time. Your second question was?
Essentially on the pricing outlook only, but what we have already seen is that while some of the domestic organized players, including you, have been able to maintain prices, but that has also come at the cost of volumes, right? We are seeing a lower volume trajectory for some of you. So, but incrementally, like you said, you have a 30% volume growth guidance. Likewise, some of the other companies also have a strong volume growth guidance. So beyond the point, just wanted to understand that at what point where pricing decision will have to come in.
See, as far as volume is concerned, I really don't see that till March there was an effect on volume. April is usually a month, the whole year people have worked. So in an April somehow there is a psychological thing. All the sales people, they relax themselves and they go and enjoy. They do their annual, meetings, etc. So all those things happen. So April may be a little bit of a concern everywhere. You can see in the whole industry, I think the same thing will happen. But till March there was no volume issue. And in coming time, you see, I don't see, because the most of the MDF manufactured in India is totally consumed in India. So I really don't see much of a problem as far as the volume is concerned. But yes, in a way, you are right. So much of capacity is coming. Yes, there will be some challenges, and challenges should be there, isn't it?
Fair enough. Secondly, I also see just a clarification that your MDF capex for the south plant has seen an increase of around 100 odd crores. So any reason for the same?
Yes, there are a couple of reasons for the same. First, of course, is the overall inflationary environment. The cost of a number of commodities, steel, cement, etc., have gone up substantially. Secondly, we have redesigned the unit so as to get a lot of economies of scale when the second line comes up. We have taken some costs in phase 1, which will reduce the cost of the second line as and when it comes up. So because of this cost has been front-loaded, but in the long term, it will save us substantially when line 2 comes up in under.
Okay. Got it. Fair enough. Thank you.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Yeah, hi. So a couple of questions. First is, sir, I just wanted to check on Sainik laminates. I believe it has been launched in a few markets. So how should we look at the positioning of this new brand? That's the first question.
Oh, Sainik laminates, the thought process behind Sainik laminates was the tremendous success we have had in Sainik ply. Through Sainik ply, we have been able to enter the belly of the market, so to speak, and gain volume traction in a category in which we were never present in plywood earlier. So Sainik laminates is launched with the same objective, and I think the response has been fantastic, but we are taking it slow, as you correctly mentioned. We have been going market by market. We have not done it in a full launch, so to speak. The reason behind this is we want to gradually scale up, and we want to ensure that there are no issues with regards to service, with regards to product, etc., etc. But I think towards the end of the year, you will see Sainik really scaling up as far as laminates is concerned.
Sure. Would it be possible to provide some color from a pricing differential standpoint? And basically, like historically, we have seen Sainik ply do actually wonders for the company. So is the thought process something similar over here as well?
We are launching this in a slightly different module to the current module of Century Laminates. So while that is more of a distribution-based module, this will be based more out of a dealer module. And, the pricing will be very different because the margin structures are completely different. But I think that you can assume that there will be 10 to 15% pricing difference at the minimum.
Okay, this is helpful. And my second question is on capex. I think if you could just detail a little more, you indicate like the capex has increased for the AP MDF plant from 600 to 700 crores. Is there some breakup which is possible, or are we looking at the optionality in the second phase of expansion, which is going to be far more? I'm just trying to understand it from a capex intensity on a per CBM basis to the increase in capex.
Definitely. So, initially we had planned for a shed that was somewhat smaller. Then when we went for the layout designing, when we went for a reworking, we saw that by increasing the shed area by close to 10-12%, we could save on 30% of overall shed area considering line 2. So because of this, it was redesigned. If you look at it, the dispatch structure for this current shed of line 1 will take into account line 2 comfortably as well. So we are looking at a cost saving in the long term, but short term, for the same capacity that we have, there has been a cost escalation.
Sure. And there has been a little bit of change on the particle board capex as well, from 5.5 billion to 5 billion. Any specific thoughts over there? That would be my last question. Thank you so much.
Yes. In particle board, you need to look at the availability of timber in any particular location. We felt that a larger capacity than this would lead to an issue for us in terms of timber availability and lead to a higher overall cost of production. As such, we optimize the capacity to 800 cubic meters. Of course, with this 800 cubic meters rated capacity, the objective will be to produce in excess of 900 and perhaps even reach 1,000. Regarding the capex, as I've already mentioned, due to the overall inflationary environment, the capex is higher. If the raw material prices had been lower as they were a year and a half ago, the capex could have been limited to slightly lower. But we will be well within the overall approved budget of 550 crores.
Sure. This is helpful. Thank you so much.
Thank you.
Thank you. A reminder to all the participants, kindly limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. We have the next question from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, good afternoon, team. Thank you for the opportunity. My question was on the MDF. Given the brownfield expansion is done, 313,500 capacity now for the full year, in addition to the new greenfield. The 30% volume growth seems to be conservative. So, does it mean that we're going to operate at 65-70%, significantly below what we operated in, let's say, in third quarter or fourth quarter? Second question I had with respect to market, if you could give what was the FY23 industry volume when you talk about a 25-30% growth? If you could talk about industry volume as well, and apart from that, the 30% volume growth for MDF segment for FY24 for us.
So, actually, with regards to a new capacity, you see, any new capacity, it's not very easy to produce 100% within the first year of operation itself. You're correct. We are looking at 65-70% utilization of the expanded capacity of the second line that is coming in. The first line will be continuing at 100% plus. So overall, we will be consuming close to 50-60% of the expanded capacity plus 100% of the first capacity. And by next year, we should be looking at a far higher overall capacity utilization for both lines put together. Regarding the overall size of the market, I think Nehal can take it up.
Yeah, the size of the MDF market by the time we ended the last year should be near to 2.5 million CBM.
And what would that be, Nehal, in FY22?
That would have been close to 1.9 million CBM or so.
Got it. And this 2.5 will include the imports, or imports are in addition to this?
No, that will include imports as well.
Understood.
Which is not much, because the imports came handy only after September onwards.
Right. Understood. The second question I had was with respect to Sainik. Can you share some more sense in terms of the mix in terms of volume, value, or the growth what you have seen in FY23?
So this is the data we don't like to share. So yeah, thank you for the question.
All right, I'll fall back in the queue. Thank you so much.
Thank you. The next question is from the line of Kupesh Chauhan from Anand Rathi. Please go ahead.
Yeah, thank you for taking my questions and congratulations on good set of numbers. A couple of questions though. On sequential basis, we have seen the MDF revenue has been declined, but on margin, and if you look at margins, it has expanded. So what has led to that expansion? Because if we compare with our competitors, they have degrown, right? So what has led to that expansion? And second is on the Andhra plant, which will be coming in second half of FY24, which is this year. So what would be the utilization for that plant? And thirdly, what is your outlook on timber prices right now? Because the competitors are saying that it will, increase further. So how we are looking at it and how we are going to mitigate it? Yeah.
Yeah. So if you look at the gross margins in MDF segment, they were up by almost 400 bips, and this was largely driven by net savings and raw material costs. So by net savings and raw material costs, what I mean is the chemical costs were down. At the same time, the timber prices were higher. But even despite the fact that timber prices were higher, the savings in the chemical cost was much higher compared to timber, and hence there was savings in gross. There was improvement in gross margins, and there was also 100 bps positive impact because of forex, which led to overall 400 bps expansion in gross margins. And if you look at EBITDA margins, they were up 460 bps QOQ at 27%. This was largely driven by spurt in gross margins.
Okay, and
regarding the timber prices, I will request, I think our chairman is online, so if suddenly I could expand a little bit on that.
Okay. Am I audible?
Suddenly, you are here?
Yes. As requested by Sanjay, actually in Century Plyboard, from the very beginning, we have supported increase in the timber price, not like other people, because we feel that farmers would only grow timber when it is giving them better yield in comparison to the case crop. And as the demand is increasing, we should support the agroforestry and the plantation. So we are always important in increasing the price of the timber. We are giving more price. We started our Hoshiarpur unit by paying 3,000 3 rupees kg for the timber. Now we are paying 6 rupees 50 paisa per kg of timber. So I think we should continue, and now our other friends in the industry, they have also realized that unless we give a relative price, there won't be sufficient plantation. So that is the thing, and it is not only in India. Everywhere is in Vietnam, in China, everywhere price of timber is increasing. So I think there would be balance, and we should realize better price for our products from the market.
So how do you look at FY24 regarding these prices? Is it going to soften?
Now, because there was a very abrupt increase in the timber prices, for some time in future to come, this will continue at these levels only. And now there is huge plantation taking place in UP, in southern India, in many other parts of the North India. So I think for time to come, there demand and supply will be quite balanced.
Okay, understood. And thirdly, I wanted to understand regarding the Andhra plant, which will be coming in second half. So what would it be the utilization in the second half, and going forward in FY25, what would be the utilization?
You see, when we say second half of the year, we are looking at perhaps late Q3 or mid Q4. Now, in either of these scenarios, we don't really get much time to run and ramp up the capacity there. So any meaningful impact from Andhra will only come from FY25 onwards.
Okay. And the peak utilization in which year we can expect?
The peak utilization should come at 80%, 85% in FY26 and higher than that.
Okay. Okay, understood. Yeah. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Mohit Agarwal from IIFL Securities. Please go ahead.
Yeah, thanks. So most of my questions have been answered. Just one follow-up on a previous question on plywood industry. So in the light of increased timber prices, could you give some color on how the industry growth has been in FY23 and in the past a couple of quarters especially? And how has this unorganized segment been dealing with this timber price increase? So how have been their utilization levels? So any color on that if you could give. The bottom line, what I want to understand is that in such situations, does the top players like you have an advantage of gaining accelerated market share?
Good question. You see, even the smaller players, there have been few units who are closed down, but the transfer from unorganized to organized in our industry is a slow process because the interest of the dealer is very high in the unorganized segment. We are trying to now, we are coming up with PVC's advertisement where we'll be actually educating the customer also now. So, yes, but some transfer, since we have gone into the belly of the market through our product known as Scenic, we have been able to quite a bit of percentage. As on today, you see, when we started, say about 4 years back, we used to see that Century Plywood was about 4.5% of the total plywood market. Today, we are estimating it to be 8% or 8.5% of the total plywood market. So, the shift is happening, but yes, it's slow. It's not to our expectations. So, what was your second question?
And sir, trying to understand, how is the unorganized segment dealing with this? Like, have they utilization gone down?
Yes. So you see, I have seen that few of them, very, very few of the unorganized segment is trying to become an organized segment in their own local districts, like in local state or local districts. So one brand has come up in West Bengal. You will find one brand has come up somewhere in Punjab, or one brand is coming up in, Andhra or Bombay. So that is what we will find. So all, maybe few 5 or 10 units will become local brands. But yes, whatever price increases they took because of this timber price increases have fallen flat, they have gone back. But this will have a long-term impact. They will not impact them immediately. They will not have a problem immediately because they have made money earlier. But yes, this will have a long-lasting impact on them.
Okay. And sir, lastly,
I will make some clarification. And there are totally different price zones and price levels for the MDF and for plywood. So plywood we need bigger diameters, and that price is different. That is now hovering around 11-12 rupees a kg. And and plywood, there are vast unorganized sector. But in the MDF, I don't see a big presence of the unorganized sector. So most of the players, they are in the organized sector only. So here is the disparity in the price is on the regional basis. At the moment, the realization in North India is better, and the price of timber in North India is also better. Realization for MDF in South India is lower, but the timber prices are also much lower. So almost 50% of the North India. In South India, still we get timber for 3 rupees 50 paisa or something per kg. So that is the difference, because South India,
the timber like plantation and agroforestry was earlier serving to the paper industry. So the volume is big, much larger, and still the industry existing along with the paper industry.
Sure,
And
sir.
the raw material and pricing is the same.
Sorry, sir?
The raw material for paper industry and the pricing of the raw material is more or less same. Only paper they buy debarked timber. So where the debarking cost and the loss in volume because of debark is added with the price.
Okay, sir. So understood. This is very, very helpful. And just last bit, sir, are there any estimates on the plywood industry growth for FY23?
This is a very, very gray area actually. So I always certainly tell that there is no authentic data available. As far as MDF is concerned, because there are very few units, there is authenticate data absolutely available. As far as laminate is concerned, still there is some data. Particle board, yes, there is some data, but plywood is a totally gray area. But we estimate that yes, it's growing at about somewhere between 5 to 10%.
Okay, great, sir. Thanks a lot.
I'll answer this.
Yes, Sajjan.
Because at the moment the total plywood volume is around 10 million cubic meters, whereas China's is 200 million cubic meters, and in population we have almost matched China, and our middle income segment, upper middle class, lower middle class are expanding very fast. So, and the housing is the thrust of the government and the country. So I am very optimistic about a very robust growth, and gradually growth will pick up. From now, the growth of the plywood, even MDF and particle board, all will grow in tandem, and at least I don't see any reason that present date China, at least we shall not reach half of the present day China's capacity in next 20 years. So if we target 100 million cubic meter in 20 years, then from 10 to 100, the growth has to be robust.
Sure, sir. Thanks a lot and all the best.
Thank you. The next question is from the line of Rishikesh Bhagat from Kotak Mutual Fund. Please go ahead.
Hi, good evening. Thank you for opportunity and congrats for the great set of numbers. My question is, if we look at it clearly, this year we have seen worst of the timber price inflation, and if I look at the initial part of your statement on the outlook side, clearly you indicated probably timber prices could remain stable in and around this level. So against this backdrop, how should we see your plywood EBITDA margin guidance, which is at 12 to 14, if I'm not wrong, 13 to 15%, slightly lower than what we reported even in Q4 margins?
So, see, we have always said that we will deliver between 12 to 14 because that's a conservative and a figure that we want to take. We will keep striving to do better like we did in Q4, but our guidance will remain 12 to 14%.
Okay. And so is there any thing that makes you cautious on this thing in the sense, or just want some insight on that?
Sorry, I didn't understand this.
Is there anything that makes us cautious that we are guiding at the lower end compared to the exit margins?
Hi, Rishi.
Yeah.
If you look at the exit margins, it has been an extremely good quarter with very good, robust volume growth. So this is something that will not be repeated quarter on quarter. Right? Definitely raw material prices have been inflated. The hope is that they will not increase much far beyond the same, as has been indicated by both the chairman and the MD. But we are taking it with a pinch of salt. So it's better to err on the side of caution. If it does not happen, then definitely you're correct. Margin should be slightly higher. But as of now, there is no clear visibility. If timber prices remain like this, perhaps we'll do better, but our guidance is 12 to 14%.
Sure. The second question is on the similar aspect. Clearly, there will be likely to be increased plantation that that was hinted by guidance as per the initial part of the commentary. Now, when I look at, say, 12 to 15 months down the line, a large part of this improved plantation should help us in terms that timber prices should taper down. Now, do you feel that considering the ad spend and spending on brand that we had done over the last 2 years, will you be able to retain part of these savings in the timber cost going forward, say 12 to 15 months down the line when timber cost actually corrects?
So, Rishi, when we look at the overall growth in the base volume and the economies of scale that brings, definitely there should be an improvement in the bottom line. But the cycle might be a little bit longer. It might not be 12 to 15 months. It could be slightly longer because the plywood cycle is a little longer than the MDF and particle board cycle.
I'm not asking on the cycle front. I'm talking from the point of view of that if timber prices moderate from here on, will you be able to retain those savings? Yeah.
Yes, but you are basing that on the increased plantation that will come into availability, right?
Yeah.
So for plywood, it will take a little bit longer because the cycle is longer. For MDF and particle board, you're looking at 4 years. For plywood, you're looking at 6 years plus.
Okay.
So I'm saying that once that correction does take place, and we are sure that it will in the long term, because tremendous amount of plantation is taking place. I mean, you drive across Punjab, or you drive across Andhra, and you'll see the sort of increase in plantation activity. So going forward, once the price is correct, definitely there's a scope for improvement in gross margins and EBITDA margins.
Sure. Thanks.
But having said that, I will add that we want to keep growing plywood. And if we want to keep growing plywood, we need to keep investing back into the business.
Sure.
So in order to do that, we need to keep investing into brand building. We need to keep investing into our different influencers that we have. We need to keep investing into our go-to market. So in order to do that, even if the saving comes down the line through raw materials, we will probably still try to maintain 12 to 14% because we want to invest back and grow our revenue more.
Okay. Thanks a lot.
Thank you. Before we take the next question, a reminder to all the participants, kindly limit your questions to 2 per participant. Thank you. The next question is from the line of Kushagra from Old Bridge Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. And just 2 questions, both on the MDF. One is, with your south plant coming in, how different would be your COGS per CBM for the south plant versus north plant? Or if you want to give a total cost per CBM for south plant versus north plant, once that plant operates on a reasonable utilization levels, broadly?
You see, the difference in timber cost is anywhere between 2,500 rupees to 3,000 rupees per ton. Now, we roughly calculate that 1.7 tons of timber is used per CBM. So that translates into anywhere between a 4,250 to a 5,000 rupee change in COGS by virtue of north versus south.
Interesting. Got it. Sure. And the second question is more on the market share aspiration in the MDF segment, because clearly you have the balance sheet in your favor, and a lot depends on where you want to be in the India's MDF landscape. So are you sort of working on certain number? I'm asking beyond 2 years, because if you have any thought process as to where you want to be in terms of market share, in terms of capacities in the MDF, because capital employed in this business has clearly surpassed plywood segment, and it's almost going to double from here on in next 2 years. But after that, you still would have a significant balance sheet support and the cash flow support as well. So just getting a little perspective as to how you are thinking about this whole thing.
You see, the chairman has always guided us that turnover is vanity, profit is vanity, but cash is reality. So we are a proven company, and we don't normally go into massive risk taking. But yes, our ambition is always to gain market share. We will attempt to be one of the largest players in the industry, if not the largest player. But having said that, we are not going to take undue risk towards that. I hope that answers the question.
Any number you would like to highlight on this?
Currently, we would be expanding to close to 1,900 cubic meters per day by the end of this financial year. And in particle board, in the next financial year, we'll be expanding to a total of 1,000 cubic meters plus. So we'll already be looking at a 3,000 cubic meters. After that, we will take some time, we will study how the market goes and then take decisions.
Here again, I will request Sajan Bhaiya, because he has a thinking about the MDF market in future, how it will evolve as far as the whole industry is concerned. So Sajan Bhaiya, hai kya aap?
Yeah.
I think that will be better to give them a perspective.
Actually, I am always very optimistic, and I am feeling that we are at the right place at the right time, because next few decades belongs to India, and in all the directions we have to progress, we have to grow and grow and grow. All the factors are supporting us. The population, the increase in the spendable income of the masses, and it is a vicious circle. So the whole thing, we are producing more, we are consuming more, we are giving more employment, we are increasing the salaries, people are saving more. So this the whole circle is created. And then the next thrust would be for the country infrastructure and housing, because roti and kapda, there are limitations. In short span of time, these things cannot change much. It's basically the habit of people and their spending pattern. So in clothes and in the food cannot change much. So whatever the saving, this thing, it would be spent on the entertainment, education of their children, and to a great extent on the housings. So I'm sure in the next 20 years, each and every Indian would have a house of his requirement, so smaller to bigger, and the people presently in smaller house would move to the bigger house and bigger in the Bangalore or something. So this will go on, and with every change, they will need new furniture, and then the whole lot of other things, white goods, other things, car, TV, pen. So this will support Indian economy in a big way. And plywood, as soon as the house is constructed, next our role comes. And along with us, all glass industry, paint industry, the piping, sanitary, they all come into existence. So I see great future. And I remember in the year 1993, when this trend started in China, then the material from all over the world was going towards China. From India, we started exporting plywood in a big way to China. I remember, and that time, the prices in India for plywood increased by 50% in less than 6 months. So that was so hefty demand, and that cycle continued for a very long time. But China could augment their plantation, their own manufacturing capacity, and very soon they started meeting their own demand. And not only that, they have become biggest exporter of plantation timber as well as the plantation product, MDF, particle board, plywood. So, and I think we are also capable of repeating that. And cheap labor is in our favor, because when I first went to China in 2007, their wages and our wages were same, 3,000 rupees a month. Now our wages is around 50,000 rupees a month. China's wages are 50,000 a month. So there is sea change, and this will continue because it is intentional on the part of Chinese government to make it more equitable, to give more income to the people. So they are intensely doing it. Almost they are increasing the wages at the rate of 20% per annum. Whereas in India, still it is demand and supply, and is less than 10% a year. So this gap would continue widening. So our production now for the low-tech items, India will become production hub for the whole world. Like earlier it was China,
From Japan, it migrated low-tech to China and then the Philippines, the Thailand and Malaysia and other countries. And gradually now, the low-tech items would move towards India and neighboring countries, Bangladesh and Sri Lanka, Nepal. So this will general development. So I am sure showers for next at least 2-3 decades, we shall have very good time.
Sure. Sure. Thanks a lot and all the best, guys.
Thank you. Ladies and gentlemen, this would be the last question for today, which is from the line of Asim Bharde from DAM Capital Advisors. Please go ahead.
Yeah, hi, thanks. Just 2 questions. First, I just wanted to understand the 2% higher value growth in plywood versus volume expectation in FY24. So basically 15% value, 13% volume is what you said. So my sense was, since Scenic was and will grow faster, so that should explain volume, but value growth should ideally be lower. So any sense on the gap here? Is it a base thing or is there anything else that I should keep in mind?
No, like volume and price are 2 different. By and large, every year we increase price. 1 or 2 revisions are there in price level. So the growth in the price.
I'm sorry to interrupt. I'm sorry, sir. Mr. Sajjan Bhajankar's line has been disconnected. May I request?
Yeah, I'll continue and I'll take up. I think what he was trying to say also is that we end up taking 1 or 2 price increases due to the timber cost, etc., everything. So hence the value growth because of the price increase will be higher than volume growth. So it has nothing to do with the Scenic and club prime ratio. It is more to do with the price increases that we take.
So purely price is
average realization for plywood is up by 5% in FY23 as compared to FY22. So I think that sort of, compensated for the product mix.
Okay, got it. And secondly, on the capex front, so FY24 will be a big year for Century Ply. But on the financing bit, will almost all of it be internal accruals with minimum long-term debt, or should there be some, of course, in your presentation, you have mentioned a long-term debt number of FY20 of 70 odd crores of FY24, but that is just buyer's credit. So just want to understand if there's any upside risk to the consolidated debt number, if any, for Century.
I think I will
take it up. Sure. Hello.
Yes, sir.
Yeah. Like for MDF or for even particle board, most of the machines are being imported, and against the imported machines, we are allowed to enjoy buyer's credit. So, like machine imported, then we can roll over the buyer's credit to next 3 years, and during that, at our comfort level, we can repay buyer's credit at any time. And usually, what we have seen starting from our Hoshiarpur plant, so whatever buyer's credit was there, we liquidated that out of our generation. So we had not to resort to the term loan for capex in the past. And same thing we are expecting, all the machines for MDF and particle board for Andhra and Chennai would be imported. We shall get buyer's credit, and this would liquidate in 3 years out of our own RD.
So I think, as the chairman has correctly put it, we had planned 0 debt by the next 2 years. However, after the addition of the particle board expansion in Chennai, I think we could be looking at a net debt figure of close to 400 to 500 crores by the end of FY25. However, considering our strong cash flow generation, that debt wouldn't be on the books for too long.
400 to 500 crores at the end of FY25, net debt, right?
Yes, net debt.
Got it. Okay, thanks a lot. Great results. Congratulations.
Thank you, sir. Ladies and gentlemen, as that was the last question for today, I would now like to hand the conference over to the management for closing remarks. Over to you, sir.
Yeah, thank you. Thank you, ladies and gentlemen. Thank you for all your wishes and your time. Looking forward to meet you next quarter. Thank you.
Thank you very much, sir.
Thank you. Thank you very much.
Thank you, sir. On behalf of Phillip Capital India Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines. Thank you.